Great. Welcome to Digital Asset News. Take a top stories in crypto and bring them out of bite-sized pieces. So today, as the thumbnail suggests, a lot of things going on with Voyager, Celsius, and Nancy Pelosi. So let's just jump into it first. Real quickly, let's just go over a little quick macro, talk about what's going on in the world and how it looks bad, but maybe not too bad. And we'll go over the Voyager sell-off in 6 days. We'll do a little Celsius update and potential plan, which I got to tell you, looks like some good news to me. Then we're going to talk about how Washington is corrupt. Can you believe that? Washington corrupt. And lastly, I want to talk to you about a Cardano DCA challenge. And the very last, we'll do a little Q&A. So let's jump into it, the quick macro. And on this channel, I've been a little bit bearish, but I think for good reason. And there's just a couple of things I wanted to go over just to kind of clarify some things. The first thing I want to talk about is it's called the 10 and 2-year Treasury yield spread. And this is one of those factors that a lot of economists, a lot of people look at just to see where we're going as far as the economy. And over here on the basic info, let me read this to you real quick. The 10 and 2 Treasury yield spread, because there's different 10 years and 2 years T-bills, is the difference between the 10-year Treasury rate and the 2-year Treasury rate. A 10-2 Treasury spread that approaches zero signifies a flattening yield curve. A negative 10-2 yield spread has historically been viewed as a precursor to a recessionary period. And a negative, let me say that again, a negative spread has predicted every recession from 1955 to 2018 without fail, but has occurred between 6 and 24 months before the recession. So take that with a grain of salt. And just so you know, we flipped a while ago, actually, on July 5th. So kind of interesting data just to take a look at. But when I was looking at this, I'm like, well, how much did it go down? And we're looking at negative 0.2, wow, 0.3, 0.4, and so on and so forth. So I'm like, well, maybe I'm just not looking at this right. Let's just take a step back because we should. When in doubt, zoom out, right? So as I zoom in. So this is 3 months. It hit negative here. Here's 6 months. It a little bit right here on April 1st. Came right out, not a big deal. Maybe that was a precursor. Year to date, here's 1 year. The only two negative parts you can see is at the very end. Here's 3 years. Here's 5 years. And then here's, well, I can't do 10 years. So I didn't sign up for the membership. But that's just looking at this and just saying to yourself, man, this could be one of those precursors for a recessionary period. Does that mean that's going to definitely happen? I can't say it's not. It's been pretty accurate so far. The big question is how deep will it be? Will it be a shallow recession or a very deep, long, drawn-out one? And that's just the first part. Also, for some other potentially negative news, Russia switches off Europe's main gas pipeline. It's called the Nord Stream 1, and they had originally said it was because of a technical fault, but essentially they're saying, no, we're just not going to turn it back on. The announcement just came just hours after the G7 nations announced efforts to introduce a price cap on Russian oil exports. The reason why I talk about these things is because we're not in a bubble. We are in pretty much a risk-on asset class. So when these things start to tumble, there is potentially bad price action on the horizon, potentially. And then also, as we talk about energy and energy crisis and things like that, we've got a lot of people throughout the entire globe. And just so you know, these types of things, as far as like rolling blackouts, it's not being talked about and done just in like Australia and Europe. We just had this in California, in Palo Alto, matter of fact. And they were going to do rolling blackouts here in the US. So this is, I think, a bigger issue than what we may think it actually is. And I think to me, it just looks like a electricity war. And that's what's going on. So now we've got a problem there. And then also I was doing a Twitter space with Wi-Fi, and one of the gentlemen there who's from Italy said his cost of natural gas has gone up 10x already. So if you're from Italy or any parts of Europe, sound off in the comment section. I'd love to hear what exactly is going on. And then also just to get back to our market itself, there was a tweet. This is from Whale Map. I couldn't confirm it, but I talked about it yesterday briefly. They talk about how someone cashed out 5,000 Bitcoin yesterday, making a $95 million profit. And this is when Bitcoin was $698. That's a pretty big increase. The question I have is why they do it now and what the heck took them so long? Did they just misplaced their private key or something? And that could have contributed to the sell-off yesterday. Also, there was a bunch of liquidations. Also, there's macro factors. So who knows exactly the specific causes. I think it's just an aggregate, and it just kind of builds up. And then to give you a little bit of hopium, hey, we can always count on Wallet 3. So Wallet 3 is the third biggest wallet as far as in the Bitcoin ecosystem. And Wallet 3 says, I don't care. Just yesterday, they bought almost 500 Bitcoin, and they've been accumulating for quite some time. So take that with a grain of salt. That's what's going on in the macro event. Let's jump into Voyager. And I just find this interesting because there's a lot of people, including myself, who have a lot of their funds stuck on Voyager. So this, I think, is a step in the right direction. Bankrupt crypto lender, Voyager Digital. Whoops, what happened? Heads to the auction block. And I find this positive because in the beginning, they actually had to roll some things back because there wasn't that many offers for them to be bought out. And now there's so many, they have to do an auction. So this was today. Crypto lender Voyager Digital has drawn enough interest from potential buyers to necessitate an auction. The auction will be held at 10 a.m., September 13th, New York office of Voyager's investment bank, Moelis & Co. Man, I would love to be there just to sit in the background and hear what are said. A court hearing to approve the results is scheduled for September 29th. The need for an auction means Voyager received more than one acceptable bid, we'll get to how many, for its assets, and no bid was clearly the best. Good news for Voyager customers, that's me and you, who are still locked out of their accounts. A higher final price tag for Voyager may result in better recoveries for customers. So in my opinion, I mean, FTX is out there, but they had a lowball offer. Maybe they came back and said, maybe it's more valuable than what it is. But I think Binance is one of the leaders. And this was a story we covered about a week ago. And it states that according to a presentation from the company's lawyers, Voyager's lawyers, earlier this month, at least 22 investors, 22, had gone through due diligence and indicated their interest in bidding for Voyager's assets. And when I think it's Binance in the lead, I mean, they're the biggest. They have probably the most liquidity right now. They're not underwater. And if they weren't involved, then the spokesperson wouldn't have said this. They state, we have a policy to only disclose deals after they are complete and cannot confirm or deny any potential deals, a Binance spokesperson said. Last week, Binance CEO Changpeng Zhao said Voyager as well as Celsius Network had approached this company to discuss selling assets. Our team's engaging in all those conversations. But I got to tell you, I think that would be a pretty big boom to push out Binance if they just acquire the entire company and the assets and make things whole. And if you know anything about business, cost per acquisition for different customers, it gets pricey, especially during this time in the bear market. It's very tough. The real question is, how can they gain their trust? I don't have an answer for that, but it will be interesting to see what happens. And now as a note, you should have received an email from Voyager. And it should have said how much crypto or digital assets you have in your account. If it was correct, you don't have to do anything else whatsoever. If it was incorrect, you had to contact them. I put a link in the description for the lawyers that you have to contact if you need to do so. However, when I took a look at mine, it was all correct. And I need to make this crystal clear. They're not giving you the dollar value of your crypto. They're not saying that on July 5th, your Bitcoin was worth 20, whatever it was. So we're only going to give you this much in cash. Kind for kind, crypto to crypto. So let me just think about that in the comments section. And then a pretty interesting account of Celsius. So going deep into it, this was a pretty good thread from Aaron Bennett. You know Aaron, he's got his own YouTube channel. Pretty good guy. Has been pretty big on Celsius, just like I was before I figured out that they were screwing all of us left and right. And he's changed his tune just like I have. And here we are. So this was a pretty good thread from what's going on. First one was from Anthony Napolitano, investor, mentor, something. And he talks about this is the Celsius recovery plan using the Bitcoin mining entity as equity. This is without the full facts. Download the information now, and it just goes out. Aaron did a great thing, and he just summarized it. And he goes, this is pretty good. Depositors would get equity in the mining biz to fill the hole when it IPOs during the next bull market, which it really comes down to this. Do you want to wait or do you want to liquidate? That's the big question if you're in Celsius. Me, personally, I was going to be around here for 3 more years, so why the hell not? So this is what he says. The probability that Bitcoin mining will affect its valuation. And rightfully so. He says, I want a third party to provide a profit and loss for future profitability, not an expert from their lawyers or their legal team. I propose to give more, because this is the plan, to give 50% of the Celsius Mining and LLC to the creditors. And Aaron's like, why? Why not give them 100%? Should the current managing get rich from a future IPO? We took 100% of the risks, and our funds were used to bill us out. Couldn't agree more. 100%, I'll be okay with 95%. Next, the Celsius name and brand is ruined. I got to agree there, and no one will entrust their crypto with any company named Celsius ever again. But if Simon Dixon from Bank of the Future or a licensed bank stepped in, the EARN program could be revived, and then Cell could possibly have utility. I got to agree. Celsius is dead. I would never invest in anything that has that name or any kind of the management team behind it. There's not a snowball's chance in hell I do it. So why don't they just do it that way? The goal is for everyone to come to this as close to 100% as possible. I'm in favor of most efficient plan to accomplish this. So it really just comes down to this. Celsius, they have Bitcoin miners. They bought Bitcoin miners. They don't have them all up to date. They don't have them all turned on right now, but they believe it could be profitable. I don't know if it could be profitable right now with the cost of electricity. And from the things that I hear from different miners, they're shutting down their mining operations because it's just too damn expensive. So when I see something like this, I see in years to come, it could. And that's where the risk comes in. So they would submit to you a token that would be a part of an equity for the Bitcoin mining operation, and then go from there. I kind of find it interesting that we could all be now, not just in crypto, but an actual physical business and be a part of that. This isn't a financial advice. I'm not financial advisors. I'm not a financial advisor, but I see some value in this proposition. Anyhow, let me know what you think about that in the comments section. And lastly, Washington is corrupt. That just sounds ridiculous when I say it, because of course it is. But we know it's corrupt. We know it's bad. We know it's ridiculous. But I just need to bring this out because I've been seeing these things on Twitter. And this is the America I grew up in, unfortunately. And it is corrupt. But it's just like the politicians are just throwing this in our face as if they're like, what are you going to do about it? You're not going to do anything. You're going to sit there, you're going to take your medicine. That's really what this is all about. This is a great Twitter account, Nancy Pelosi Stock Tracker, who is the Nancy, Congresswoman, is like one of the most impressive, well, actually her husband, the most impressive investor of our time. They seem to get everything right. It's amazing. It's like they have some kind of insider information. Not that they do. Do not sue me. I got my own problems. But I love this Twitter account because it just kind of lays bare what's going on. So Fun Fact Friday. Back in 2021, the Pelosi's bought 25,000 shares of Microsoft. Weeks before the U.S. Army announced a $22 billion contract with them. Last month, the Pelosi's sold 25,000 shares of NVDA, weeks before the government tells them to stop selling to China. Fool me once, fool me twice. So they just got pretty well off in those two deals. And that's just Nancy. What about the others? Well, here was a trading news. Senator Tommy Tuberville, Republican, owns 530,000 of Ecom shares, with his largest purchase to date happening 1 month ago. Today, Ecom announced it will be acquired, and the stock jumped 55%. Maybe they're just lucky. Maybe that's just how it goes. However, this just came out yesterday. Newly unsealed FBI documents show how Senator Burr traded after pandemic briefings in February 2020. He abruptly liquidated 80% of his and his wife's holdings after the meeting and reportedly called his wife's brother to do the same. Weeks later, the market crashed. Good for them. And it's not just them. Here's an article from Insider. 72 members of Congress have violated a law designed to prevent insider trading and stop conflict of interest. This law is called the Stock Act. And what are the penalties if you go against the Stock Act? $200. While lawmakers who violate the Stock Act face a fine, the penalty is usually small. $200 is the standard amount, or waived by the Ethics Committee. Because, if you got your buddies on the Ethics Committee, why would you pay that? $200, I can't afford that. So I find this deeply disturbing, and it's something that I know we talk about and we joke about, but it's ridiculous. And the next thing I will say is this: why don't they just pass a law? It's a great question. A great question. Unfortunately, if you do any kind of Google search for how many times Congress has tried to ban the stock trading within themselves, it goes back decades. And you can just do a quick Google search, 2022, 2021, 19, 17, and it seems to never get past. Just amazing to me. I don't want to harp on this, but it's just one of those things that I just wanted people to know about because I find it deeply disturbing. And some people say, well, life's unfair, Rob. Well, no kidding. But does that mean that they get to plunder everything that's out there and we just get to get the scraps? This is why it's very hard to compete against the people up above who have all the information. It's not what you know, it's who you know. And really what it comes down to is what kind of insider information you have. Anyhow, let me just think about that in the comment section. Let's finish up with a Cardano DCA challenge. So I put this out on Twitter this morning, and I just thought it would be pretty interesting if there was a website, and maybe this is already built. I don't know if it is or not, but there's a great website called DCA BTC. And you can see how much you would gain or accrue over time frame if you just put in just some certain numbers. And you can check it out, dcabtc.com. I think there's a link in the description. And I just want to see if anybody can do that for Cardano and maybe even Ethereum and some other different cryptos. Because I think it's great that it's there for Bitcoin. But I think when people see the effect of, how much they put in, if they put in, $1,000 3 years ago, you're going to have 6,000, almost 7,000 later on. Well, I mean, over time, weekly and such and so forth. So if anybody knows or has the ability to create that, I will foot the bill for the website to prop it up and to put all the information out and make it for free. I just need a developer to do that. So if you're one of those guys, reach out to me at NewsAsset. Let's make it happen. So that's what I got. So that is it for today for the news. And that was pretty good, 16 minutes or so. It's not too bad. So look, if you got to take off, take off. It's what is it? Wednesday. A lot of things going on today. So if you like today's video, give it a thumbs up. Consider subscribing. We do these things every day. And right now, let's get into the Q&A, and I'll answer all your questions the best of my abilities. And we shall do that right now.